Hey guys, Luke Downey here, and it is April 8th, 2021. We're going to be going over this week's blog post. Okay, so you can find all of that information for free, MAPsignals.com. I figured, you know what, let's go ahead and get into it. Let me share my screen, kind of walk you through what we're seeing in the data. And I got to be honest with you, there's a lot of bears that are, beating the bear drum. I'm not seeing it, man. The data is looking pretty positive, and I think we could be going moonbound, but don't take my word for it. Let's just look at the data. So the theme of this week is gradually, then suddenly. And I didn't come up with that. Actually, Ernest Hemingway did in his, I believe it's 1926 novel, The Sun Also Rises. Basically, he's talking about habits, how habits, they start out gradually, then suddenly they become something bigger. And then we're all surprised. Well, you know what? The same thing happens with stocks, and especially outlier stocks. Okay. And let's go ahead and look at the data. Well, now we can see that gradually, right? You guys remember the big money index, which measures big money going in and out of stocks, right? So if that line's going down, money's coming out of stocks. That means the market's going to be going lower. If that line is going up, that means money's going into stocks. That means the market's going to be going higher. What have we been seeing? Well, growth stocks, they've all been on a downtrend, right? Been on a downtrend. That's starting to change. You're starting to see the big money index starting to point north, kind of like the rocket back here behind me. It's saying up, up, and away, but that's just one data point, right? We got the infrastructure bill. We've got all types of stimulus all over the world. You got earnings that's about to come up. Speaking of earnings, check out this chart. This is really cool. This is the buying and selling under the surface of the big money index. So green bars, that's big buying in stocks, right? That's what we want. That's the juice. Red, right? You see these red bars, that's the selling. That's big money selling. And what we see off to the right is where we are now, and I've circled it, and we're in this quiet period. This quiet period is, in between earnings. We've got earnings really about to start next week. But you can see prior times over the past year, there isn't much that goes on, right? But after we get through some earnings, there's going to be companies that are going to guide higher. They're going to have phenomenal comps that are coming this quarter. I can tell you that right now. And then typically we start to see some green. So the data is saying put the bear drums away. But that's just stocks. Let's look at another indicator. The same thing. This is ETFs. What do we see with ETFs? It's the same type of action, right? And I don't have to go over it, but ultimately over to the right, what do we see? A couple of months ago, I don't know if you guys can see that, but there's some red right there. Okay. And that was growth stocks coming under pressure. It was also bond ETFs. A lot of those bond proxies, they were selling off. Why? Interest rates were going up. That's what they do. And when interest rates go up, growth stocks get hurt. But off to the right here, you got to get that magnifying glass out until I get some better equipment. You start to see some green, some shades of green. It's looking really good. You're starting to see the seeds of greatness are starting to sprout in our data. And that is what is making us more bullish. And what is leading the charge? Great companies are starting to see some outliers, names that print money. Speaking of names that print money, what about Facebook? Literally prints money. And what you're looking at here, these are the big money signals that Facebook has actually been in our research. So these are the times that it's been a top rated stock. So it was a top 20 name in our research 72 times. Okay. It's not a fluke. Okay. The big money is all over this name. And that is how you win the game of investing. The first time that this stock came on our radar, it's up right about 700% since then. Okay. That is juice, juice, juice. And I get it. I hear you loud and clear. That's 5-6 years. Luke, I don't have 5 and 6 years, even though it makes a lot of money. I don't have 5 or 6 years. Well, hold your horses, because we do options too. And I want to show you what happens whenever you get a juicy options trade. So let's roll back the tape. Prior to the election, what was going on? Nobody wanted value stocks. People hated retail. And Kohls is a great company. It was just battered because everything was shut down. Well, you start to get a little bit of positive news about the reopen. You start to get some really positive news that people are going to be spending money again and they're going to take the masks off. So what ended up happening is Kohl started to ramp, but November 1st, before the whole switcheroo of the growth value trade, our suggested options trade for the week, it was a bullish bet on Kohls, and it was to buy one of the Kohls April 25 calls for $2.91. This is back right over here. This is when Kohls was doing nothing. It was a $21 stock, but guess what happened? Now it's over 61 bucks. And if you had held those options, that's what we always say, just hold. You got to hold. If you want the greatness, you got to hold. That call right now would be worth north of 1,100%. So look, gradually, then suddenly, that's what tends to happen. The data changes fast. Don't give up on your outlier stocks and put your bear drums away. Also, what are these fortune cookies? That's not how you pick stocks. It's not going to help you. You know what? Follow data, get a game plan, and that's how you win over the long term. And always, 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 you got to be betting on quality. So, guys, leave us some feedback or a comment if you like these types of videos. Should I be doing updates about our weekly blog post? Let me know. I'd love to hear from you. Have a great week. See you.